The Reserve Bank of India has cautioned about the considerable growth in personal loans. On an annual basis, these accounted for 37.7% of incremental credit in August 2023. Out of these, credit card exposure grew 30%, while auto loans grew 21% and home loans grew 14%. Is a bubble building up in unsecured credit? According to the latest TransUnion CIBIL report, in the second quarter of the financial year 2022-23, these balance level serious delinquencies improved across product categories. But this improvement didn't include credit cards and personal loans, which are unsecured in nature. Even so, the improvement suggests that consumers appear to be managing their credit repayments responsibly.
Give you some perspective around retail credit overall first. I think just to give a context that the retail credit has outpaced the overall banking sector growth. And it is not just the last 2-3 years. If you look at it from a 5-year perspective, share of retail credit has gone up from some 23% of banking credit to nearly 30%. So as of September, we are looking at this to be nearly about 44 lakh crore on a 145 lakh crore gross credit. Now, if you split this into a composition from what is called as secured and unsecured, 75% of this is actually secured and primarily, I would say, driven by home loans and vehicle finance. So that leaves us with the balance 25% of unsecured, which is where there's a lot of discussions in market today. Now, if you look at this 25%, this translates to around just about 7.5 to 8% of the overall banking credit. Now, specific to your question, Raghu, on the asset quality, I would say firstly, in any lending, any fast-growing portfolio, lenders always need to pay close attention to credit appraisal risk management systems.
The TransUnion CIBIL report also says that for consumers having at least one small ticket personal loan, the balance level delinquency rate was 5.4%. This is an increase of 120 BPS since the second quarter of the previous financial year 2021-22. The overall retail loan portfolio looks at the outstanding balances of all retail products including home loans, auto loans, credit cards, personal loans and others. Delinquencies on small ticket personal loans have a marginal impact on this overall retail loan portfolio. What needs to be watched carefully are small ticket personal loans of less than 50,000 rupees. They make up for 0.3% of the total retail loan book size at an industry level. Now, while delinquencies on such loans have a marginal impact on the personal loan portfolio, these need to be monitored closely. This is especially so because consumers may prioritize other payment obligations ahead of personal loan payments. This will, in turn, be a wider indicator of financial stress.
The stress is quite real, given the fact that the credit from an unsecured perspective is more towards funding consumption today than any productive use. So just in terms of, from an example standpoint, we have a lot of loans actually being given to people for the purpose of funding consumption, such as purchase of mobile phones, or basically in terms of even lifestyle expenses. When you basically have credit being extended significantly towards such end users, the worry is basically in terms of the stress building up within the system. Credit being given from an investment perspective is always better because at the end of the day, it is fueling a lot of movement within the economy. But consumption is very short-term focused. And the risk more so in terms of from a credit from a consumption standpoint is that it is significantly dependent on the economy doing well. So, and given the uncertain times and the wars that we are actually in terms of seeing, a small pivot in an external macroeconomic environment can significantly have changes in the income earning potential of these people, which is the basis of on which these unsecured credit is extended. And we believe that that could be a significant challenge. So the stress basically in terms of is significantly dependent on how the external environment is doing, and which is also the reason why the regulator is also concerned about the same the increased portfolio exposures from an unsecured credit standpoint.
The swing towards retail banking was triggered by the weakness in large parts of India Inc.'s credit quality over the past few years. It had led to a pile-up in bad loans and cut banks' appetite to give out corporate loans, and retail became the go-to segment. In its report on the trend and progress of banking in India 2021-2022, the RBI observed that in recent years, banks appear to have displayed herding behavior in diverting lending away from the industrial sector towards retail loans. Empirical evidence suggests that a build-up of concentration in retail loans may become a source of systemic risk. The Reserve Bank is equipped with its policy toolkit to handle any systemic risk that may arise. The silver lining is that the TransUnion CIBIL Credit Market Indicator, which measures changes in credit market health, stood at 100. This is the same level as a year ago.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.